ahead is that we just got the inflation numbers for 7.5%. Now, inflation, or I should say CPI, rose up to 7.5%. People were expecting it to be 7.2. Some were expecting 7.3. I went on record, stuck my neck out on the line, showed you guys my numbers. And I even thought, hey, 7.3 is likely what we'll have. Well, I shouldn't say likely, but we'll be close to somewhere around 7.3. We got 7.5. So the estimates that I had, along with other people on Wall Street, was around 7.3 and beat those expectations. But we were pretty dang close.
Yeah, that's impressive.
So, again, I make these models from multiple regression. Anyone can do this. The data is publicly available. If you know how to assemble these things together,
but you're extremely smart. But you're extremely smart too.
But well, nah, like
you're impressive, bro. Like, I'm so happy that you're the co-host. Like, you're so smart, dude. I call you a genius on my channel. I'll be like, yo,
oh, no.
Like my co-host, he's a freaking genius.
But the cool thing about doing this is I was eyeing this back in November. So I have a 2-month lag with all this data. As you can see down here, I'm eyeing around 6.15 in March.
Like, dude, that's very accurate that you were able to do that.
We'll see what happens. I overshot it a little bit in December, undershot it a tiny bit in January. But as you can see down here, even if these numbers aren't exactly on the money, I expect CPI to come down a bit in the coming months. And that's what other people are expecting as well. In addition to this, the Fed is also starting to get a little bit more hawkish, with Fed's Mester saying, hey, each meeting is going to be in play for rate hikes this year. So remember in our episode last week, we spoke about how the Bank of America basically said almost every meeting, they're expecting there to be rate hikes. The Cleveland president, Loretta Mester, basically said, you know what? That's an option. So even though we were like, hey, that's completely unrealistic, there's no way they're going to raise them every single meeting. What she's basically saying is, yeah, that's actually in play. That could possibly happen.
Yeah.
So the
possibly,
Fed is,
though. Keyword possibly. Keywords they use are expect, possibly. That's important too, because speculation alone, if people think that will happen, the markets will move before the actual, situation.
Yeah, before it actually happens. Exactly.
And were they trying seven rate hikes?
Yeah, which would be insane.
Yeah.
So like, imagine that would be, let's just say it's 25 basis points each time. So that would take us to roughly, 1.75 for those interest rate hikes. That's a lot. And I think maybe in the first episode or so, and this might have been maybe something I did on my channel a while ago, I was showing how the federal funds rate basically didn't get up to last time we tried to raise rates back in 2018. We got up to a certain level, but every single time you raise rates to a certain peak, it never surpasses the previous peak in business cycles. So that to say, if that pattern continues, will we even get past 2% as far as rate hikes are concerned? Who knows? I'd be surprised, if we're even able to get to where we were in the previous cycle. So again, as high as we got back in 2018. But let's dig into this article a little bit. Cleveland Federal Reserve President Loretta Mester laid out an aggressive plan for reducing easy money policies this year, saying the central bank will be ready to hike rates at any meeting and should be looking at shedding mortgage-backed securities it is holding. Each meeting is going to be in play, Mester said Wednesday at a virtual event hosted by the European Economics and Financial Center. We're going to assess conditions We're going to assess how the economy is evolving. We're going to be looking at the risks, and we're going to be removing accommodation. Her comments come with markets widely expecting the Fed to raise its benchmark short-term borrowing rate at its March meeting. So again, that's coming up next month, guys.
Yeah.
Pretty much right around the corner.
Yeah.
Traders are pricing in at least 4 more increases throughout the course of the year. So we're seeing all this repricing happening, not just in stocks, but because there's repricing happening in stocks, because there are people selling, the dollar is in the short term a bit higher than the trend that it was heading down in 2021. And it's adding some of that downward pressure onto assets like silver. So as rate hikes continue to be forecasted, expect that downward pressure to maintain. So that's why I'm saying, hey, spot price may come down, but premiums will still be in play.
Yeah.
Continuing down here, Mester said she sees a March hike like lately, but doesn't expect to raise the rate by more than 25 basis points or a quarter percentage point, as is the norm. So, maybe in this first rate hike, we might just get 25 basis points. But, the Fed is basically saying over and over again, look, we may be pretty aggressive here in 2022. And it looks like the markets are trying to price that in. How are you seeing this, Silver Slayer? What are your thoughts on that?
All speculation. Like it just scares me a bit because nowadays, okay, so back in the day, since silver is tangible, since it is, supply and demand, speculation didn't have as much of a pull. But nowadays, especially as we advance, like social media wise, speculation has a huge play in the game, and we have to adjust and adapt to that, right? Like when they said we should see this, they expect to, that isn't set in stone, but people will invest as it is. They'll invest like they are going to do 7 or 8 hikes, even though that might not be the case. And then after that plays out, then the markets will correct back, kind of. So we'll almost like see a false market price. And that can be scary because people will be investing during that, not realizing that the markets will correct or shift dramatically afterwards. And a lot of people that are newer could get burnt, especially if they panic sell. So it just seems scary, especially like March when that happens. Like things could get very, especially, looking at the numbers. It's a great entry point, right? Worrisome at least, just because there's so much happening.
Right. And